I do think it's a medium-term story that's still there, right? If we think over time, yes, the CPI data was a bit hot in the U.S. It's probably going to keep the Fed hiking for the next few meetings, probably makes them keep rates in restrictive territory for a bit longer. But that pain now, restrictive territory now, just means pain in the long term. One way or another, rates are coming down in the U.S., inflation will come down on the back of weaker growth, might just take a bit longer now. Over time, what that should mean for the dollar, given that it's already overvalued, as rates come down, the dollar should see some weakness over the medium term, but specifically against kind of low beta, low yielding currencies. Things like the yen, things like Swiss franc, I could make a case for gold, even the euro to some extent. We're not really making a bullish call on global growth because rates are coming down on the back of slower growth and slower inflation. So we haven't really been on the emerging market train. We do see some interesting opportunities outside of the U.S. But I do think the real message from the CPI data out of the U.S. yesterday is higher for longer from the Fed, at least in the near term. But over the longer term, they'll have to ultimately
define your longer term, because I mean the problem we've had with all of this talk of transitory inflation is none of it has fallen into the time frames that the economists laid out for us. So I mean over the longer frame, I think we all understand that anything is possible. But I mean, when do we begin to see that shift take place? Because we're now pushing out expectations for the first cut in rates beyond this year.
So we've been looking for the U.S. to actually go into that recession, the labor market to start to really weaken. We've called it the second half of this year, called that Q3 into Q4. I'll fully admit, I think after the data yesterday, we probably do need to push that into Q4 into Q1 of next year. But we don't think that this is really being delayed 3, 4, 5 quarters. The Fed has a mission here, and they're going to complete it.